Good day, everybody. This is Yin Yang with hardly a bit of light on my face. I am getting ready to leave for the day. I am getting ready to go meet somebody for brunch, and then afterward, I am going to get on a plane to go back to San Francisco. So, this is my show. I inspire people to have a great day with morsels of a thought of wisdom. And the wisdom comes from other people, such as Chris Naugle in the Private Money Guide. It is a booklet, Solutions to Finding Money, Where to Go, and How to Ask. And it's the real estate edition. So we're reading from page 17 this morning. I'm checking myself in the mirror because there's so much going on in here that, yeah, anyway, packing and everything is, it's true. It's not fun. I went to the San Diego Zoo yesterday. It was fun. Am I live? Yes, I am live. Okay. Thank you for coming. I try to get people to have a great day with morsels of a thought of wisdom. My fortune cookie many years ago said, knowing the right thing to do is called wisdom. Doing it is called virtue. Wow. Boom. And after that, I said, well, I want to bring more virtue in the world because I was practicing a technology called the Yanqing life science technology, and it is about how to prolong your life. It is possible to prolong your life without improving your health. For example, if you wanted to live healthily, goodness gracious, you might wear yourself out and pass on early. Good morning, Tess Hulick. How are you? Goodness gracious. And I don't remember if you came. Did you come? Oh my gosh. Chris Naugle. I know. I was going to put that into, I had to make the caption short. It has to be 50 characters and under, and so sometimes I remove the booklet, sometimes I remove the author, but it is Chris Naugle's book, and I actually am reading the book, and I'm holding up some copy of the title page, the not title page, but the cover. Resource number 3 on page 17. Mutual funds, stocks, non-qualified investment accounts, and certificates of deposit. Okay, so here we go. These resources are similar. This is what the Chris Naugle is saying. This is all Chris Naugle's words. These resources are similar to what I mentioned earlier when discussing checking and savings accounts. These sources are not as sacred, but they will present some interesting challenges when you try to tap into them. The type of accounts I am referring to are any investment account that is not a retirement account. These accounts are typically very accessible. When people have strong profits and the markets are doing very well, it is wise to take some or all of the profits off the table to shield against future loans. As Warren Buffett says, buy low, sell high, and I add, don't lose money. This is something people are talking about, and they are looking for ways to invest that are not correlated to the stock market. You hold the answer to what many investors are seeking: high fixed rate of returns and asset-backed collateral. In my experience, this resource has been extremely useful for fast closes, transition funding, or extremely short-term deals, like a wholesale deal or a paint and carpet fix and flip that can be sold quickly. I have also tapped into this resource for rehab funds in a second lien secured position. deals where I use bank funding to buy the house and then use money from one of these funds to pay for my rehab costs. It is important to remember that if you use private investor funds and they are in a second position, to be sure that the property has adequate equity to support the debt. I typically make sure each deal never exceeds 70 to 80% of ARV, after repair value. By maintaining 70 to 80%, you are always certain that, if needed, you can seek bank funding that will be sufficient enough to cover the loans on the property. I always plan for an exit on every deal I do. This way, I never get into, my timer has just gone off. This is crazy. Sorry. Oh gosh. I can't block my face on my new phone. Oh my gosh. This is so picky. Not Chris. I'm talking about my technology. It's in the background and it's just having fun by itself. I always plan for an exit on every deal I do, says Chris Naugle. So let me read that sentence again. By maintaining 70 to 80% of after repair value, you are always certain that, if needed, you can seek bank funding that will be sufficient enough to cover the loans on the property. I always plan for an exit on every deal I do. This way, I never get into a situation where I need to liquidate assets to cover the loans. The main thing to remember when tapping this source of funding is that people will be seeking an interest rate higher than what they have been getting in their current investments. In a strong bull market, this may be a tough conversation. In a bear market, when the stock market is down, this will be a much easier conversation to have. Lastly, I mentioned certificates of deposit as a potential source. CDs typically pay low interest rates and are FDIC insured. Most investors that buy CDs do so because they are seeking guarantees which you cannot offer. Never guarantee returns or interest rates in any situation. You cannot provide guarantees under any situation, and it's illegal to do so. So he's underlined this part. Never is italicized. Guarantee returns or interest rates in any situation. You cannot provide guarantees under any situation, and it's illegal to do so. That helps to remember it. Resource number 4, the $1 trillion source. This is the most important thing I can teach you, says Chris Naugle. This section will talk about a massive resource called IRAs, old retirement accounts, and self-directed IRAs. Individual retirement accounts are one of the largest pools of money out there. How large? Well, over $2 trillion in the United States alone. I mentioned this when discussing the 401k strategy, but it should be mentioned again. The stock market has been doing really well the past few years. This was done in 2017. This is 2018. This booklet was printed in 2018. Okay, I lose my place when I do that. Okay. This section will talk about a massive resource called IRAs, old retirement accounts, and self-reflected IRAs. Individual retirement accounts are one of the largest pools of money out there. How large? Well, over $2 trillion in the United States alone. I mentioned this when discussing the 401k strategy, but it should be mentioned again. The stock market has been doing really well the past few years, which means it may be time to think about taking profits and gains off the table. Here are a few reasons why I feel it is time to rethink your strategy for your IRA accounts. One of the hardest things for most investors and their advisors to do is decide when the time is right to start selling off either all or some of their investment portfolio. We get stuck in a pattern of thinking that the market and the investments will keep going up. For me, the time has, he says, for me, the time has arrived to take profits off the table on almost all of my stock market investments. Now, don't get me wrong, I am not selling my entire portfolio and moving to cash. It is simply time to reposition my investments into alternative investments that are not correlated to the stock market. The market is simply starting to look a bit dangerous. I'm also seeing patterns develop that scare me to death, and I am convinced a correction is coming in the near future. I wanna add in. This is Yin Yang reading from a booklet. This is not Yin Yang telling you what to do, and he's got the disclaimer in it anyway. So I want to make sure that you understand that these are all Chris Naugle's teachings, and that I know nothing. Okay, pretend I know nothing. Pretend I'm just a voice reading off what he says. Okay, because I am. The Federal Reserve has kept interest rates at an all-time low for far too long. Stocks have an inverse relationship to bonds. When interest rates go up, bond prices go down. If rates go up too far, it drives bond prices lower, which eventually has a breaking point. You see, if the proverbial bubble were to burst in the bond market, interest rates could skyrocket in a short period of time. This has happened in the past. Do you remember when the former Fed chair, Janet Yellen, told the world that her desire was to start straightening out the Fed's $4.5 trillion balance sheet? This was not a bad thing, but straightening this out at a time when interest rates are rising is risky. It is all about liquidity in the system. It's underlined. Liquidity in the system. The central bank withdraws liquidity by selling its bond holdings. In turn, this will drive long-term interest rates higher. As I mentioned earlier, bond prices move inversely to interest rates, therefore, bond prices could plummet. Ever since the stock market hit its lowest point in 2009, all three major indices, the Dow Jones, S&P 500, and the NASDAQ, have returned triple digits or higher. One reason for these huge market moves during President Obama's term was all the money and liquidity the Fed pumped into the system. This was one of the main resources. This was one of the main reasons why the markets and our economy did not collapse. I'm going to read that sentence again. This was one of the main reasons why the markets and our economy did not collapse. The Obama stimulus and the liquidity the government pumped into the economy by buying bonds is what saved the markets. If they hadn't done so, the liquidity would have dried up and more banks would have failed. Another thing to consider, what happens when corporate earnings decline from today's speculative expectation. In my opinion, I feel this is currently keeping stock prices artificially high. I believe this is happening now, and it has been happening for a few years already. This is 2018. Any way you look at it, stock prices can't remain at these levels. The markets have always gone up and down in very predictable patterns. These patterns and market cycles should not be ignored. The last thing to pay very close attention to is M&A activity. M&A means mergers and acquisitions, which if you haven't noticed, have been happening at extremely high levels. Companies are gobbling up competitors and other companies to gain market share and increase earnings to help their earnings grow for greedy stockholders. When companies cannot grow organically, they turn to markets and mergers and acquisitions. However, buying up other companies when the markets and the economy are at high levels means paying a premium price for the purchase. Not only is paying too much for something concerning to me, it always it almost always results in speculation of future expectations, which is even more dangerous. This is exactly what has been happening lately, and it's happening at extremely dangerous levels. Now that I have completely bored you with my old financial advisory opinions, let's discuss what real estate can do for returns, especially for retirement account returns. Underlining here says, real estate can provide a great alternative to stocks. That's what he's underlined. So let's get into how this works. Now, before we begin, I want to be completely transparent on a few things, and I need you to understand what a self-directed IRA, SDIRA, is. And then he has a picture here. It says retirement. A self-directed individual retirement account, SDIRA, is an individual retirement account, IRA, in which the investor is in charge of making all the investment decisions. The term self-directed IRA is a bit of a misnomer because all IRAs are self-directed. You decide where to invest your IRA funds. The self-directed IRA provides the investor with greater opportunity for asset diversification outside of the traditional stocks, bonds, and mutual funds. Self-directed IRAs can invest in real estate, private market securities, and more. All securities and investments are held in an account administered by a custodian or trustee. Now that you understand what a SDIRA is, here are some pitfalls to using them that you must be familiar with. First, self-directed IRAs have a lot of rules, and these rules are very important to understand and abide by. Here is a link to a frequently asked question, FAQ, that should give you an idea of these rules. Okay, here's a link. I'm going to read you the letters very slowly, okay? /frequently-asked-questions-about-self-directing-self-directing/. Okay. So it basically is https://www.horizontrust.com/learn the four-step process of self-directed IRAs/frequently asked questions about self-directing. Secondly, what I am going to explain does not involve you using your SDIRA to buy real estate. You can do this, but I do not recommend it. There are so many ways to make a mistake, and one mistake could cost you a lot of money in taxes and penalties. I am only referring to using SDIRAs to loan money to others for secured real estate deals. A self-directed IRA is a type of traditional, self-directed IRA is a type of traditional or Roth IRA that is used to save for retirement and is structured in such a way that it facilitates withdrawals at a specified age. Self-directed IRAs are different from traditional IRAs and Roth IRAs only by the assets they hold. These accounts are designed for DIY, do-it-yourself, investors and allow their owner to invest in a much broader array of securities than with a traditional or Roth IRA. Because these accounts are administered by their owner, they require greater involvement and due diligence by you. Investors seeking an SDIRA will have to look for a brokerage that specializes in these types of accounts. These companies are willing to serve as the custodian for the SDIRA investment assets. Some SDIRA companies still impose constraints on the holdings of the fund. So, it is important to ensure that the account allows you to invest your funds in a way that makes sense based on your overall financial plan. Some SDIRAs may specialize in specific alternative assets such as private equity or private debt. So we are currently on page 22 in the middle. We're going to start on the second paragraph next time. I hope you have enjoyed this. It is something that you can do. These are Xeroxes of the front title, the front cover, which is right here in my hand. And I hope that when you get these tidbits of information every single day, that it helps you to become wiser in such a way that either you think that you agree with me with what I'm reading, or you think you disagree with me and that you have learned about a pitfall. So this clock. Yes. Okay, I'm gonna see you tomorrow. I shall be in San Francisco then, and my cameras are falling apart. I got lenses in there. I got my tripod was falling apart too. I brought 2 tripods just in case. I brought, anyway. So that's all. That's all, folks. And I'm going to talk about that old Kinderhook congressman who wanted to make sure everything was right. Okay, old Kinderhook. Bye.